In prior cycles, the sector was exposed to more extreme volatility, higher highs, lower lows. The industry is trying to manage through what seems to be a rather clouded backdrop right now. So we're sitting here and you got nat gas somewhere around 330, Henry Hub. You got WTI in the low 60s. You have OPEC bringing back on capacity and maybe even speeding up that capacity adds. You have a more clouded, broader economic backdrop across the globe. You have geopolitical issues. So lots of uncertainty. And not only Exxon's probably going to cut somewhere about 2, 3, 4% of its global workforce. Its Canadian affiliate, a much more substantial cut, roughly about 20% over the next 2 years or so. You're seeing it at ConocoPhillips. You're seeing it at Chevron, even BP, the major European energy conglomerate. You're seeing it across the board. And so, Paul, as you know, when you're not growing revenue, right, you're not getting the revenue increase on price. You're not growing production because your investor base does not want to see that production growth. You are looking at very steady revenue, maybe even declining revenue. You have to manage that net back from the cost perspective, and you have to support that cash flow stream. And so you're doing it via these cost cuts over a number of years, 2, maybe even 3 years, to sort of bring that cost structure in line with the new reality of uncertainty in the marketplace to reduce that volatility.
Well, there's cost cuts, and then there's Exxon Mobil's cost cuts. Since 2019, it's trimmed $13.5 billion in annual costs. That is more than all the other big oil companies combined. How much more room is there for Exxon to slash expenses?
Well, it bought Pioneer. So it has a relatively sizable workforce in general. It doesn't necessarily mean that those cuts are going to come there, but there are ways you cut. You gain efficiency in this technological era where we have advancements across the energy value chain. You will consistently and continually seek out ways to get efficiency, to bring down that cost structure and to bring unit cost in line with a very anemic outlook for global energy prices in general, and also a very clouded outlook for the global economy too.